Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. I just have to say, thank God it is Friday. I say to us guys, let's finish the week strong. Been a pretty interesting week. The other day, on Tuesday, we had this very directional move to the downside. It was incredible. However, Wednesday, choppy day. Choppy day. Now, as a day trader, price action like this, for me at least, I consider it day trader's paradise. Because every setup that we had, every breakdown that we had or recapture that we had led to a very nice level to level move. Sheep style trading. Sheep style trading. This was good. But in the bigger picture, not very good as far as having a directional day, having a trend day. We had 1 day of trend as far as the smaller time frame goes. Right here. Okay. For those who are unsure. This right here. And then followed by the chop phase already. Okay, keep in mind this is a smaller time frame. And using the smaller time frame, we just watched the sell zone, the buy zone, using Uncle Charles' level from the daily chart. Right now, I do have a chop phase range. Okay, the buy zone right now is at 586, and we can see here that we kind of got like a little downtrend line here. Okay, little downtrend line, looking like if you just pay attention to the green lines. All right, I'll change the color of this one to yellow. All right, if you just pay attention to the green lines, it looked like a triangle structure so far. All right, a triangle structure. So 586 is the bottom of the chop range. With the top of the chop range, well, based on this triangle structure, the green line, it's around 590 today. All right, I do have a level, resistance level around 589, and it does slope down throughout the day. So I'll be watching 589 and of course 591, which was also a sell zone from Wednesday. Okay, so basically, if we are to be bullish, we have to break out this chop range. For me to consider it broken out or cleared, 589 and 591 once again must clear to put those higher targets in play. 592.6, 593.5, 595, and 596.5 would all be targets I'd have if those two levels can clear today. We can get a nice trend move to the upside if 589 and 591 can clear. And I like to use the 15 to 30 minute chart to confirm intraday breakouts and breakdowns. Okay, now if we are to end this chop bearishly, we need to see 587.5 break down first, which is, as of right now, as you guys can see, if I zoom in a little more here, that red line 587.5 is serving as a support. So we can break 587.5 and 586, then the chop range ends bearishly. We could definitely head down lower. That would also break down this multi-month uptrend line here, this white multi-month uptrend line I have. That would be very bearish, putting 584 or lower in play. I think we can drop all the way down to 578, maybe even fill the gap around 576.5-ish. All right, so we got the bull case and the bear case. Now it's on us as individual traders, individual sheeps, to trade it unbiasedly. Triple Q. Now, we had this big body red candle on Tuesday, followed by a doji on Wednesday. Will we get bearish continuation, or will we get a reversal? Because a lot of times it's two candle where you get this red big body candle followed by a doji. You can potentially get a big body green candle. All right, and if it is going to be green, resistant levels must clear, starting with 515 and 517 to put 518.5, 520, and 522 plus in play, okay? And if we can get over 522, I think our bottom is in. We will clear this down trend line, this green down trend line, all right? To be bearish and give us more downside, a continuation from Tuesday, 513.5 and 512 must fail to put 510, 508, or all the way down to 505-ish would all be in play, all right? Tesla. Well, Tesla recently on Tuesday broke down this fib level I had around 43.6s. On Wednesday, it just came just shy of testing it. All right, just shy of testing it before getting a bunch of sell pressure. So that's the critical level up there around 43.6. And there's also this fib level around 396.3ish. We broke it down on Tuesday. Wednesday, it looked like it was going to get recaptured, but they failed towards the end of the day. That is still resistant level. As long as below, next support's at 395, and if 395 fails, we're definitely heading down lower. 395.5, 392, 390.5, and 389 would all be targets. But if we can clear 396.3, then back to the upside we go. 398, 400, 402, and a test of 403.6 would be in play. I can't favor a bottom is in unless we can recapture 403.6. And even then, it's not guaranteed. But to increase the odds of a bottom being in, those levels must recapture. NVDA. Now, recently, January 3rd, we cleared that 143 fib level. Then on Tuesday, January 7th, we had a false breakout setup where we closed back below the 143 fib level. Okay, on Wednesday, the bulls failed to get the recapture. As a matter of fact, the bears stepped up, gave some selling pressure around that area before pushing it lower. As of right now, that's some bearish price action, at least for the short term. Okay, so I would stay bearish on NVDA overall below 143 because the breakdown stays intact. Getting below 140 is another step the bears need to take, which they are right now. As of speaking, it's gapping down. Now, 138 and 136.8 fails. That is bearish follow through. Either keep holding your puts or look to enter puts. The RSI is not oversold, so it's good risk reward ratio in my opinion, and that will put 135, 133 or lower in play. I would not trust a bounce unless 140 can recapture to deny and close that gap. Okay, to deny bears the gap down, close that gap, clear it. 141.5 and 143 would then be in play, and if those level recapture, I would be bullish again. Why? Because it would invalidate the false breakout setup. But as long as the false breakout setup stays intact, then the bears have a shot at some more downside. Just watch the breakdown of the next support. IWM, once again getting buying pressure right around that fib level around 219-ish. But they'll need to recapture 222 for me to really trust the bounce. 222, 224, and get above 226. Otherwise, if we break down support level, okay, 220, well, based on all the buying power, I'm watching 219 today. Okay, we break down 219. That will put 217, 215 or lower in play. Okay, but overall, I'd be bearish below 222. Losing 219 will confirm it, but I can't favor a bounce unless levels start recapturing 222, 224, and 226. Apple, just chopping around as of right now. I still need to see 241.5 and 240 break down to put 237.5 in play. We still have that multi-month trend line over here that I'm watching, this white multi-month trend line. Bears need to get down below 240 and 237.5 to really break that trend line down. And if bulls are going to step up, this is a round support buy area, I guess. But if bulls are going to step up, they'll need to recapture 242, 244, and 246 for me to trust the bounce serious and, you know, to give us a sign that the bounce is going to take us to higher levels. Okay. Amazon still looks bearish to me. We have the false breakout of the bull flag, but they'll need to show some follow through today. Bearish follow through would be to break down 220.6. to put 219, 217, and 215.5-ish in play. I'm trusting no bounce unless 222 and 223.6 can recapture. Above 223.6 would not be another breakout of the flag and a recapture of the fib level. So that's a level that must clear. Otherwise, 220.6 fail, we are heading down lower. Meta, it was a nice pullback we had on the 7th. The 8th definitely had some follow through here, went down and retested that 603 fib level before we bounce. And level to level is so darn important. But as of right now, we have resistance at 610 and 612. For that low buying pressure that we had around the 603 area to continue and push it to high level, 610 and 612 must clear to put 614, 615.6, and 617 plus in play. If that was a dead cat bounce, then once again, support levels must fail. Started with 608, 606.5, 605 to retest 603 and break it down. 603 would cancel all that buy order that we had from Wednesday and push us lower, possibly below 600 again. Microsoft consolidating and chopping around, but if bears want to send us to lower levels, 424, 422, and 420.8 all must break down. I would be bear bias below 420.8. I can't truly trust a bounce unless 426, 428, and 429.2 can recapture to put higher levels in play. DXY, the candles are getting smaller. Volatility is decreasing. But can volatility return? We are flirting just below the fib level. I have at 109.3-ish. If it's a true rejection, then 109, 108.6, and 108 all must break down. I trust rejection from resistance when it can break down support. Otherwise, we could be consolidating. And if 109.3 finally clears, 109.5 and 110 would then be in play. Coin, very nice pullback. Very, very nice pullback. You know, I try to trade Doge, mostly to the long side. It's been all right. But when it drops, you notice how coin drops. Like the price action is similar to each other. So very nice. It's short coin. You know, when the opportunity is there. We did break down that 265 fib level on Tuesday. Wednesday, we turned that area into resistance. So there's some bearish price action there. So if the next support at 260 and 258 fails, I believe there's definitely more downside in coming down to 254, 252, 250.7, and 249. I can't trust a bounce unless lost levels are recaptured. So 260 defend, 262, 263.5, and 265 all must recapture. I'd be bullish again above 265. I'd favor 270 and 274 plus to be tested. Doge got the breakdown the other day of 38 cents, which definitely led to more downside. Broke down 34 cents. And now here we are back at 32 cents, guys. Level to level is a must. All right. But you guys notice the chop phase. We can still learn from this, guys. Chop phase. Right? Chop phase. We may be in another chop phase. And each chop phase, it's like they're powering up to give us the next leg, the next power move. So once we're in the chop phase, we identify the range and we wait for the breakout. Okay, so right now I have resistance at 34 and support at 32 cents. 34 to 32 cents. All right, allow it to consolidate. We break 34 cents. We can go long, play it up to 36, 38 cents, maybe even 40 cents, play it level to level, and leave runners in case we go higher. Because not every chop phase lead to a reversal. Sometimes a chop phase lead to a trend continuation, all right? But if we break down 32 cents, I would not long, obviously, because we break down support, it's likely setting us to lower levels. So if you long, and then we head down to lower levels, you're going to be red. All right, so if we lose 32 cents, yeah, that would be bearish. I would watch coin if you want to short. You know, coin's nice. Bitcoin is consolidating as well. We did lose that 95.7K level. But we're bouncing still around critical level, 93K. I need to see 93K break down and 91K break down the centers to the lower levels. All right. But if this is a bounce, 95.7K must be captured. If it does, that would be bullish, and we'll likely head back to 100K or higher. All right, guys. Thank you guys so much for watching today's video. Good luck today. It's Friday. Let's finish the week strong so we can have a good weekend. Peace.